Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Tuesday, the 12th of May, there's been a mixed outlook that's been developing through the European session today. Nothing too decisive in terms of direction at all, really. There was a very slight early sort of lean towards risk aversion overnight, and that sort of unwound actually as the European session has got going. We saw futures on S&P were around about 0.7% lower earlier. They're now basically flat on the day. That's allowed European equities to rebound, certainly FTSE feeling the benefit of it. The dollar had been performing fairly well, but now it's lost those earlier gains and is now sort of trading lower as the euro is positive. You've got the yen positive. You've also now seen Aussie and Kiwi turning marginally positive as well. So it's certainly weighing on the dollar. Nothing too decisive in terms of direction though at all. In terms of yields, they're sort of not a million miles off day high now, but even though they are slightly lower, but broadly sort of consolidating as these markets have continued to really do so in recent sessions. Key mover today seems to now be oil. Oil has picked up in the past couple of hours as the announcement that Saudi Arabia are going to cut 1 million barrels of production in June, and that's certainly helped to stabilise what is still a bit of a consolidation on oil, and that continues to be the case, but still helped to just stabilise the market a little bit when it was looking at potentially rolling over. Just talked about in my webinar just earlier the fact that the WTI June contract expires next week, so keep that in mind as the market just sort of is consolidating really. But essentially, we're seeing that these markets are still seeing an ebb and flow of risk appetite. Pretty much on a daily basis, you get assessment of how economies are reopening, but then you also get the news flow that apparently Wuhan, which was the epicenter of the original outbreak of the COVID-19 virus, is now going to be testing all 11 million of its inhabitants. So amid fears that the infection rates are starting to pick up again. So that's not great news. Chinese inflation overnight dropping more than expected. Again, not ideal news there. But we have seen that S&P futures have held up fairly well, so not any real decisive turn towards a negative yet. Few Fed speakers, Bostic and Evans overnight, talking about negative interest rates, and they were not a big fan of it. Seems to be that that's sort of helped to stabilise the dollar earlier today, but that stabilisation has just drifted out. We've got Randall Quarles, Patrick Harker and Loretta Mester, all of the FOMC speaking today, so watch out for those. You've got the inflation data for the US as well this afternoon. That inflation is expected to fall away quite sharply. We're expected to see inflation on a headline basis falling to 0.4% year on year after a 0.8% decline in April for the month of April. Core inflation expected to come back to 1.7%. That decline in oil prices really hitting. So my chart of the day is the Australian dollar versus the yen. Now this is always an interesting chart to look at, and what we saw last week was just a rebound once more that held this support band. Now this is really interesting because you look here. The original March high was 67.62 on Reuters. Last week's low, 67.62. The breakout, another support, 67.23, basically to the pip on that old April low as well. So the market is still certainly looking at that support band as a really key, important level now. Having broken out above it, it's holding that support band on repeated tests over the past few weeks. But it is essentially still a range. Now, there is a slight uptrend, you can argue, with the linkaging of the lows over the past 6 weeks, 7 weeks. Momentum indicators edging positively configured, although again, given the fact that we've sort of ranged for the past 4 weeks, it's sort of a little bit less positive than it could be. It's 70.15 is the key level, and actually the fact that the market has picked up from just above 69 figure, which on the hourly chart I can show you today is picked up from there, that has been a basis of a pivot on the hourly chart. 69 figure picking up from there is a positive, so holding above that 69 figure level is a positive, and putting pressure on 70.15. Momentum indicators hourly chart relatively sort of muted, not really decisive either way. But given the reaction that we've seen off that low today, those positive candles, even though they were decelerating as they were going higher, that positive reaction is still a good sign that 70.15 could well be tested. Now I continue to take Aussie yen as a proxy for market risk appetite, and so breaking out above 70.15, that would be positive broadly for equities, I would say. So watch out for that. But certainly Aussie yen picking up again and looking at that resistance once more. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also you can go to watch our Trader Talks videos, which gives you a few trading ideas.